All right, guys, so here we are, Monday, June 27th. We're almost done. We're almost halfway through this year. Can you believe it? Market's off a little bit. We're pretty much digesting the gains from last week. So a couple of cleanup items. What the fuck is with Overstock.com? I don't see any news. This stock is down. Stock is down like 9% now. You know, I had this bull call vertical on it, and I had some decent profits, real decent profits, but today it's just getting hammered. So I don't know. I ended up closing out this trade for a small gain. All right, so here's Overstock, OSTK. I had this bull call vertical on it. So on the 21st, we had sold the July 1st, which is expiring this Friday. So it was getting long in the tooth anyway. When the stock down 9% today, I said, all right, let me get out of the way, right? So these were the July 1st $33 strike price calls that we sold for 56 cents, and then we went ahead and we bought the July 1st $30 calls for $1.67. Today I unwound them. I made a little bit of money. I made about 3.5% on the trade, but all things considered, with the expiration coming up and the way the stock is acting, I'll get out of the way. Just felt like I needed to get out of the way. This is Kraft Heinz, KHC. I did this because there was some unusual option activity that I found on the Bloomberg terminal. Again, that strategy's been hit or miss, so I need to be a little bit more picky when it comes to that. But here we are. I did this, I went long calls, and this thing just kind of kept falling, right? But over the past, call it, few days, it kind of bailed me out, right? So this thing ran from 35 up to 39 this morning, and I was taking some big losses on these calls, and I came in this morning and there was a gain there. So another one that I just felt like I needed to get out of the way. Sometimes you get that feeling, and this one here just didn't feel right, so I got out. So here are the KHC. I went long the calls. This was on June 1st. I had bought the July 15th 37.50 calls for $1.38, and today I sold them for $1.70. Represents about a 23% return on the trade. One more trade today. So here's Cigna, having a really strong move over the past 2 weeks, right? From call it 240 up to 270. We're long calls on this, so I took half off today for a gain. Now these, I went out to August 19th, so I still have time on these, but I took a little off anyway. So I had purchased on June 8th. I had bought the August 19th 270 strike price calls, paid $10.70 for them. I sold half that position today for 12 bucks. Right, so it's a 12% gain. I still have the other half, but you know, just in case this rally, we should be fading a little bit. I am really exposed to the long side. If you take a look at this, you see here 75% of my portfolio is exposed to the upside, only 14% to the downside, 11% is neutral. So I do have lots of exposure to the upside. So trimming where I can, I think that's kind of the move here. All right, two new trades. Here is Carvana. Look at Carvana. It was trading near $400 a share, and then through this downturn, it came down to $20 from almost $400. That's stupid. That's nauseating. Anyway, the stock has moved big, right? So it hit 20, now it's bounced up to 30, about 31 bucks. So it has hit, well, it seems like it hit some type of bottom here. Volume had come back into the name. I did a bull call vertical here in the very near term, just to take advantage of some of this momentum. So here's Carvana. Today we did the bull call vertical. I went ahead, I sold the July 8th $33 calls for $1.49. I went ahead and I bought the July 8th $30 calls for $2.69, looking to make a spread. I'm actually doing really well in the trade today so far. I'm up about 11% in the trade. 11 days to expiration, so we'll see how this works out. One last one. So this is the semiconductor ETF, ticker symbol SMH. I did a bear call spread on this, so you can see it's been in a relative downtrend. It's coming up, testing its 20-day moving average here, which is heading lower, which is below its 50. If we are, or if we should be fading this rally, we'll be doing it right here. So I just need this thing to stay below $223.14 by this Friday, and I'll be able to keep a nice spread here. The spread that we're looking to make here is about 34%. On this spread, which is pretty good considering that this is expiring on Friday. It's about 2,500% annualized, right? That's ridiculous. So we'll see what happens. So with this one here, I had sold the July 1st 222.50 calls for $1.94, and I went ahead and I bought the 225 July 1st calls for $1.30. So should these both expire worthless, I'll be able to capture that premium. We're doing okay. We're up about 5% in the trade so far. But that's basically it. That's what I have today. Looking to get some more downside bias into the portfolio. Hopefully that this run that we have, and I'm not hoping the market goes down, trust me. We're exposed to the long side. But I hope it does give me a couple of nice setups so that way I can enter in some company-specific downside plays here. All right, that's all I got. Speak to you tomorrow.